Cash flow problems are a common and critical issue for businesses. Even if your business is highly profitable, there can be times where cash flow is dwindling and working capital needs an uplift to maintain business operations. For struggling businesses, cash flow problems can be more serious, and the need for emergency finance is imperative to turn things around. One funding option that is particularly prevalent when it comes to alleviating cash flow problems is Invoice Finance, where you can convert your unpaid invoices into cash, allowing for smoother business operations without the constraints of slow-paying debtors. Typically, you can receive around 90% of the value of your unpaid sales invoices, unlocking cash that might have been taken 30, 60, or even 90 days to come in. You can choose to adopt Invoice Finance against your entire sales ledger or selectively against individual unpaid invoices, and we can help find the flexible finance solution to suit your business. In many cases, you can get the money you require within 24 hours of approval. There are two common forms of invoice finance. One is known as invoice factoring, and the other is known as invoice discounting. Invoice factoring is the most widely used form of invoice finance available, where you can access cash tied up in invoices while outsourcing the payment chasing process to a dedicated team of professionals who manage these collections on your behalf, allowing you to focus your time and efforts on the business. Alternatively, if you would prefer to keep the credit control process in-house and handle the customer relationships yourself, well, you might prefer invoice discounting, where your customers will not notice that you are using an invoice finance facility, which allows you to stay in control and keeps the process completely confidential. If you'd like advice on the best finance options for your business, contact our dedicated